the indices should come up on your screen. And these are the two names which we were highlighting. IT on the back of course, the big move in the Nasdaq, and metals with the dollar sharply lower. The two names which Mitesh and Sudarshan ran us, sort of gave us, Hindalco and JSW Steel, both of course are also participating, so that's good. What else? I mean, let me just take a quick look at the broader markets in terms of individual names. We've got Birla Soft. So, these are mid-cap IT names. Birla Soft with a 3% gain. It's coming up with large volumes. Coforge is coming up with a 4% pop. Tech Mahindra is coming up with a 2% gain. So Birla Soft, Coforge, and Tech Mahindra. L&T Infotech is up 2.25%, and so is L&T Technology Services, which is up 2%. Both the L&T IT twins are up. What else? Policy Bazaar is coming up with a 2.25% gain. Happiest Minds is up about 3% or so. So that's coming with at about 977, decent gains for this point in the day. So it's all mid-cap IT in the broader markets which are doing well. The auto index is down. It's actually, I think, the only large index which is down, sectoral index which is down, weighed, of course, by Bajaj and others. Bajaj is down 2.5%, as we've been highlighting. Shriram Transport, ran up 7% in the last 30 minutes yesterday. That's down about 3.5% today. And I'm just kind of trying to see if there is anything else. Some reversals after that sharp run-up we saw, MSCI-led run-up that we saw elsewhere. HUL, which has been relatively strong last few days. HUL is starting 0.5% low, but keep an eye. I mean, the rally in HUL is only 2 days old. There is Eicher Motors, which is down about 0.6%. And Jubilant Food is down a little bit as well. But, the very, very initial raise, and these are the names which have got some volumes. 115 points higher is what we have, 18,873 at this point in time. Manish Sonthalia is our market master of the day. He's head of equities PMS at Motilal Oswal Asset Management Company. Manish, great to have you with us here. Appreciate your time. This is now, of course, past the previous peaks into uncharted territories. Clearly a bull market. But of course, I mean, historically, we've had markets participating together. I'm saying global markets participating together. Not a situation where elsewhere there is stress and the market here is doing exceptionally well, which is what we have now. And that creates a bit of dissonance. How would you kind of read things from here, near to medium term, especially as we head into the next year?
So all this while, in the last 1 year, we have seen the small caps and the mid caps lead the rally from the front. The leadership mantle is now being taken by the large caps, and that is what is having a positive run-off on the, the benchmark indices, the Nifty and this. India has been one of the strongest economies in the world. I mean, that's a given. The positivity around this time is on the back of the dollar having peaked out. I mean, that's my assumption. And, depreciation of the dollar basically is positive for emerging markets. And, India is one of the shining stars in the emerging market space. And FIs who have been sellers all this while have turned buyers. And the buying is only going to accelerate, is my assumption, in going into the next year, the beginning of the next year, thanks to earnings, outlook for FY23, FY24. So I would believe the bull market is here to continue, and things are only going to get stronger as we move forward.
You're saying the FIs will continue to buy into Indian markets because they seem to be a little uncomfortable with India's valuations. And then you've got other markets like China, Hong Kong, etc., where things appear to be on the mend. They've been languishing for the last 1 year. But if they truly open up, the outlook improves, and plus you've got valuation support. So are you confident that the FI support for the Indian markets will continue?
I mean, that's my belief. They have sold big time last year. And of course, the emerging market space as a whole, the gem, the global emerging market space, India will have its own share of allocation. So whether it's 2.5%, 3%, of course, favored economies like a China or a Korea, where valuations are much more palatable than what India has been, will maybe gather more share, but India will get its own share. And India, for record's sake, is always been expensive when compared to other emerging markets, thanks to the asset base, which is lower, and better ROEs, so to speak. So valuations is not too much of a concern. We are not exorbitantly expensive, so to speak. Around 21, 22 times 1 year forward numbers is not very expensive. And if we were to get a 20% growth in FY24, things should be okay.
Hi Manish, good morning. You know, I recall what Mr. Ramdev Agarwal had said, right? The FIs are getting an easy exit now, but it's going to be a painful entry for them because they'll have to come in at higher levels, and it seems it's playing out in that manner, so kudos to him. But Manish, you know, I wanted to ask you about the broader markets.
Absolutely.
Everyone is celebrating Nifty at around 18,000. But you go out there and speak to a lot of people, they're saying my portfolio is not like 19,000, it's more like 17,500. Do you believe now the catch-up will happen from the broader markets and we'll see more participation, which will make portfolios feel good?
You know, the peculiar thing about small and mid caps is that you have to go through time correction. It's not that the stocks which you're holding, you know, will continue to move up in line with the benchmark indices. That doesn't happen. So we have had a great run in the small and mid caps. It's time to play some catch up because, you know, you can't have too much of a diversion in returns profile between the benchmark indices. I mean, that has historically not been the case. There has been some divergence, but not a very big divergence. So I think they will go to, nothing wrong with the fundamentals of the small and mid caps is that valuation catch up will happen with the large caps leading the mantle as opposed to the mid and small caps in the last 1.5 years. That's about it. So, yeah, you may see that mid cap is still about 1,000-1,200 points away from its all-time high, whereas Nifty. But you know, the returns which have come in the small and mid cap space has been slightly front-ended, so to speak. You know, and typically small and mid caps would, or the broader market, so to speak, will trade at some sort of a discount to large caps. I mean, that discount has narrowed significantly over the last 1-2 years. I think it's just reversion back to the mean as far as historical numbers in terms of the, you know, the valuations between the broader markets and the benchmarks.
Manish, when you speak to corporates, how confident are they about the outlook? Because the global environment is still a bit uncertain and muddled. So in that sense, could you give us a sense of what corporate conversations are like, the optimism levels, their plans, their corporate capex plans, etc.? Because in the earnings season as well, if you strip out the banks, it was a very ordinary Q2 for us.
Banks and technology have delivered okay sort of numbers. I think the hallmark feature for the Q2 numbers has been pressure on margins, and we all know because of supply chain disruptions and inflation, raw material costs have been slightly worrisome. I think as far as the second half of this year is concerned, slightly more benign inflation sort of a scenario come January of next year would lead some softening of raw material costs. And I think export is somewhat where people are not very confident about the growth thanks to what is happening in the developed markets. You know, whether it be pharmaceuticals, whether it be textiles, gems and jewelry, you know, the volume growth assumptions on the export side of things, you know, as far as the corporates are concerned, is slightly iffy. Of course, China +1, Europe +1 is all playing out in specific sectors, but that's one area of worry. As far as India domestic story is concerned, I don't think there's any sort of, you know, bearishness that we find when it comes to talking to corporates. As far as the capex cycle is concerned, if something is to be taken as a, you know, benchmark, all the top 6 corporate houses of this country is embarking on capex, whether it be Tatas, Birlas, you talk about the Adanis, Ambanis, you know, Bajajes of the world. So, I mean, that gives you a sense that, you know, now with the public capex, even private capex, things are slightly moving. And this is only going to gather steam, is the assumption. You know, capex cycle is firmly, you know, having some sort of green shoots or more than green shoots, so to speak. So, yeah, optimistic also on the investment side of things.
Manish, great excitement and enthusiasm. I mean, a little earlier about the auto pack and what could happen, because, you know, for many years sales were slow, things were not picking up, and after COVID, with a lot of the pent-up stuff coming back, sales did pick up. But do you think this is secular in nature, or do you think, you know, it's going to be very dispersed? I mean, you just had numbers from Bajaj, right? Domestic sales once again are weak, but there are other segments which are doing very well. What's your sense?